How's it going, everyone? It is Andre Williams from the Hard Gainer Academy. Over here, we choose stocks to get your portfolio in shape. Also want to throw in a disclaimer. I'm not a financial advisor, and this isn't financial advice. So when you do invest, just know that you're doing it at your own risk. So today, we're going to be talking about VGAC that wants to go public with 23andMe. This is actually a SPAC play. And the best part about it is VGAC is actually ran by Sir Richard Branson. He has a great resume and is a successful entrepreneur. His recent SPAC that you may have heard about was Virgin Galactic. Well, not even may have heard about it, you must have heard about it. So the fact that he wants to get into this biotech space with 23andMe kind of piques my interest. And one of the things that you know, especially if you are new to this channel, any company that we look at and we decide to invest in has to have the KLTs. We got to be able to know the company, like the company, and trust the company. So what we're going to do right now, we're going to go through on a description of what the company's actually all about, all right? So 23andMe is a privately held personal genomics and biotechnology company based in Sunnyvale, California. It is best known for providing a direct-to-consumer genetic testing service in which customers provide a saliva sample that is a laboratory analyzed and a single nucleotide of polymorphism genotyping to generate reports relating to the customer's ancestry and genetic predispositions to health-related topics. The company's name is derived from the fact that there are 23 pairs of chromosomes in a normal human cell. So just to kind of sum that all up, this is a biotech company that's in the genomic space, and I'm actually going to be talking about how it works. We need to know exactly how it works, so let's jump into that as well. All right, so the first thing that you need to do is order. So you choose from their health or ancestry or trait services. Your saliva collection kit is in the same for both services and typically arrives within 3 to 5 days. Express shipping is also available. So now number 2, you got to do the spit test. Follow kit instructions to spit in a tube provided all from home. Register your saliva collection tube using the barcode so we know it belongs to you, and mail it back to our lab in a prepaid package. Then 3, discover. In approximately 3 to 4 weeks, we will send you an email to let you know your reports are ready in your online account. Log in and start discovering what your DNA actually says about you. All right. This is getting very, very interesting. So now what we want to do is find out when we submit these test results and so forth, what happens next. So let's get into it. So what they state, you get really easy to digest results backed by really rigorous scientific standards. So the 23andMe report, Jamie, your genetics are associated with a typical likelihood of developing type 2 diabetes. So that's pretty good. So it can really show if you can be exposed to any type of health conditions. Science should be fun. It should be easy to understand so everyone, and not just the scientifically inclined, can use it and benefit from it in meaningful ways. This is great in the sense of sometimes when you might go to the doctor, or maybe you get caught up in a Google search trying to figure out what your test results were telling you when you got a certain order prescribed or you did some certain type of a test. They actually break it down, make it easier for you to understand, and you don't have to be trying to break your mind or kill yourself trying to figure out, okay, that's what that means. I actually like that. I like that. And another part is you're also in control of your DNA and your data. We believe you should have a safe place to explore and understand your genes. That's why privacy and security are woven into everything we do. We also believe in choice, so you're opted out of sharing unless you choose to opt in. So you could choose whether you want to have your data shared. And I really like that because, again, privacy, confidentiality may be an issue for many people, and at least you have an option. But if you do, you can help fuel scientific discovery by answering questions. When you consent to research, you can participate by answering online survey questions. This helps 23andMe crowdsource billions of data points. The data, which is stripped of personally identifiable information, is then studied by our scientists, often in collaboration with researchers at academic institutions, other companies, nonprofits, organizations/centers like the National Institute of Health, resulting in scientific discoveries. We also use this data as we work to discover novel treatments for patients with unmet medical needs. So according to the company, they're saying we're not just a genetics company. We're not just a health company. We're not just an ancestry. We're all of these things. We want to tell you about you. Hey, I like the marketing there. But now let's look at the numbers. It says we've been in business since 2006. So this company has been around for quite some time. So this is something that is very important for us to know. And it's something that I like because at least we know they can be reliable. All right. We've also sold more than 12 million kits around the world. The fact that they've sold 12 million kits is something that we need to realize here, because as we were going through this, we realized it isn't just a health company. This is a data company. And the fact of where we're going in the future and so forth, and getting to know in regards to DNA and certain changes and advances that we're seeing in the health industry, this becomes even more crucial. Just imagine what they could do with this kind of data. The next thing is we're the only direct-to-consumer DNA test that includes 55 plus health reports that meet FDA requirements. That is very impressive in the sense of, you know what, as far as future growth and potential, I could see a lot of things happening with this company. All right, so let's look at the value of this deal in regards to the SPAC and actually 23andMe going public. The deal values the company at $3.5 billion, and current shareholders will own 81% of the company. Wojcicki and Branson each invested $25 million themselves as a part of the $250 million fund formed to take the company public. The deal is expected to close in the second quarter, at which time the company will begin on the New York Stock Exchange under the ticker symbol ME. I think that's actually pretty cool, ME. Imagine having a stock like that in your portfolio, ME. Anyway, so what is Richard Branson saying? As an early investor, I've seen 23andMe develop into a company with enormous growth potential. Again, this is coming from a man who's achieved a lot and is a forward thinker and has been successful because of it. Driven by Ann Woj's vision to empower consumers, and with our support, I'm excited to see 23andMe make a positive difference in many more people's lives. Again, know, like, trust. These are some of the factors we need to consider before investing inside of a company. Another thing that is interesting that I'm going to be sharing with you guys is what happened actually in 2015. So what I find very interesting is Cathie Woods from ARK Invest, who's been nailing it. She's literally been hitting a lot of home runs with a lot of the stocks that the ARK Invest is actually in, has said this back in 2015. 23andMe has sold enough DNA kits to accumulate genetic information on 850,000 customers. Hashtag genomic revolution. Again, when you see this type of recognition coming from Cathie Woods back in 2015, then you know that this company has some sort of growth potential. Am I saying that Cathie Woods is going to be investing in 23andMe? No, I'm not. Do I think that she will? Who knows? But I'm thinking maybe not, because again, the ARK, they actually have a genomics fund that they have, and there's a lot of solid companies in there already. So since we know this is a biotech company, let's see what the relationship has been like with the FDA. I find that it's very important. We kind of touched on it quickly earlier before, but was there ever a moment where, you know what, the FDA said, hey, you know what? No, you can't do that. The reason why I want to explore this, because we got to see some of the good stuff, and then we got to see some of the struggles this company has actually had, or if they ever had any in the first place, all right? So in 2013, 23andMe received a warning letter from the FDA to discontinue marketing its health-related genetic tests in the United States until it completed the agency's regulatory review process. We compiled with that request, and subsequently, and until October 2015, provided only ancestry reports and raw data to customers who purchased the service. A new 23andMe experience launched in October 2015. The new 23andMe experience reflected almost 2 years of work with regulators, our scientists, medical experts, and product designers. The result is the first direct-to-consumer test available directly to individuals in the United States that includes reports that meet FDA requirements for being scientifically and clinically valid. 23andMe will continue to seek FDA authorization to offer new reports. This is big. So this is a company where, you know what? Yes, the FDA stepped in and said, hey, no, not here. You need to go through these processes in order to legitimize what you're doing. And they did exactly that. Let's say it again. KLTs, know, like, trust. These are some of the things that we need to look at before we invest in a company, all right? So now the next thing that we need to look at, which is one of the most important things, of course, is the stock price. Let's take a look at the stock price. So what I'm showing you guys on the screen right now is how the stock price actually moved on this particular news. It was literally at a low at $13.40, $13.40, and ended up reaching a high of $18.34. Luckily on Friday, the price came back down and ended up closing the day at $16.04. And in regards to after hours, closing at $16.50. So as you can see, it's really trying to level itself out, especially after receiving the news. So as far as making an investment decision, these are some things that we really need to consider to make sure that we are not overpaying. If you've been around long enough, I was talking about this in my CCIV video. Let's take a look at the warrant. So the warrant for VGAC before the announcement was $3.26. Now the price is at $5.03. So this is another thing. I love looking at warrants because it's actually another way to actually make some profits. If you believe in this company and you feel like this is a company that can grow, once it starts getting more attention, of course the stock price is going to begin to go up. So if you know that you believe in the company and you're buying stock, but at the same time you want to make a little bit of extra profits, or maybe you may not want to sell your position in the actual stock, then picking up some warrants are very, very helpful. Now, as far as what my strategy is going to be, like I said, I'm not a financial advisor and this isn't financial advice. So if you invest, just know you're doing it at your own risk. So what I'm going to be doing is I'm going to be looking at the stock and I'm going to be looking at the warrants, but mainly more so the warrants. Because one of the things I've noticed with a lot of these SPACs, the last thing that you want to do is get in when the price is at a level that is too high. Currently, right now, the price seems very, very fair because before the news, it was in the $13 range. Now, with everything going on, it looks like it's kind of leveled out. It's in the $16 range. So if you're trying to make some money on the run up, especially since this merger is going to be happening in the second quarter, so it's going to be a little bit of time, it's going to get some more attention and so forth, the price is going to go up. So if you want to ride that and get some profit, by all means, you could do that. You could do the same thing with the warrants. Hey, maybe you may not want to pay the amount of money that the stock price actually costs. You can go with the warrants that are a lot cheaper, but also as the stock price is going up, the warrants go up just as much in value and plus even more. I've seen this with a lot of SPACs. So if you want to make some quick profits or you want to actually just say, you know what, yeah, I'll buy some stock or I might buy some warrants, but I don't want to keep it, then play the run up. I'm telling you, like, it's literally, I'm not going to say it's a guarantee, but I see this happen with a lot of SPACs. Play the warrant, play the stock, maximize your profits. If you believe in the company, of course, if you buy the stock, make sure you build out your position in a wise way. And what that means is that you might see some fluctuations in price, right? So let's say, for example, this price ends up running into the $20 range, the 25 to 30. Then I would start saying, well, you know what? Be smart with how you started. So what that means is if you get in now, let's say if you get in around the 15 area, if you're luckily 15, even 14s or even 16s, just kind of focus on building out a position in those areas. As far as building out positions in the 20s and in the 30s, if the stock actually goes there, you're taking a lot of risk because then if the merger ends up being announced, more times that I'm saying this from experience, the price goes down. The price goes down, it might go up a little bit and then it starts fading out, right? So another thing that we need to look at as far as financials, this company is not going to have their first public financial report until afterwards, until after the merger is announced. So that's something that you want to keep in mind and just know that the risks that are involved with that. Also, you got to understand, this is a SPAC at the end of the day. Worst comes to worst, if nothing goes through, the stock could go down to $10. That is the baseline. So even if it runs up to, let's say, $25, $30, whatever, and let's say it just falls through, the deal falls through, it didn't work out, then this stock can go back to $10. That's another thing. Hey, you just got to be able to know those risks. I want you guys to realize that before deciding to make an investment. I'll be talking to you guys soon. Peace out.